Good morning, traders. It is Wednesday, January the 8th. Lots going on in the markets. Obviously, pretty volatile the last week and a half. And yesterday or last night, we saw some pretty big market moves. Iran fired more than a dozen missiles on the U.S. Iraqi air bases, and that caused a big sell-off. We saw the SP 500 down about 1.8% at one point last night. You can see the futures daily chart here. It sold all the way off, crashed way below through the 20-day moving average, and it has since recovered again very strongly after that. It's actually trading positive on the session, up a tenth of a percent this morning. I read somewhere that the Fed dumped in about $150 million in overnight trading into the markets, and looks like they might have saved the day again. Overall, the markets just don't want to drop whenever something happens. We're just seeing huge buybacks. You can see the last few sessions here. We've seen on Friday, we saw the market gap sharply lower, had a strong rally back. 2 days ago on Monday, we saw market gap down even lower, down below our oversold territory. This green hashtag, the market ripped to the upside for a very strong close. Yesterday was a nothing day, more or less taking a pause or a breather, and then we had news last night that caused the market to sell all the way off down to, where did it go down to? It went down to 31.82. So the market crashed here. This is regular trading hours for the SP 500. So you don't see overnight, but the market came all the way down to here, below this 20-day moving average, and then we've seen it have a sharp recovery. So more or less, I think the market may have cleansed itself, washed itself out, went to an oversold territory. It's recovering. Believe it or not, it could be primed and ready to break to the upside after this multi-day consolidation here. Now, a couple other things going on. Boeing, it had another crash last night, 167 passengers dead, and it happened in Iran. Pretty interesting. They're saying they think it's a motor, an engine failure or fire, but obviously if there's missiles going on over there, it might not have been the jet. Boeing trading lower this morning. Terrible news. What else is going on this morning? Looking over at the markets, more or less they've fully recovered from everything that happened. Let's just take a look over at gold. Actually, we'll just whip through the other markets here. In order. Here are bonds. We talked about bonds starting to break through the 20-day, and 2 days ago starting to give us orange bars here, saying it's starting potentially to change from a downtrend to an uptrend. If we look at the price action on the short-term chart here and give a Fibonacci extension, we can get a downside target from this high down to this low and up to this high. Gives us an area where the market should find some support. And you can see here the market pulled back, and yesterday it sold off, got close to this 20-day and the 5-day moving average, close to this downside target. Obviously, bonds had a huge pop last night. If you look at the daily futures chart, bonds popped all the way up to 159.18, which is equivalent to way up here in the market, but they have since then come all the way back down, and now they're trading back down in this normal range. So overall, bonds are showing signs of life, and the risk off assets are showing definitely a migration of money with everything going on overseas. If we take a look over at gold, gold had a huge move last night. Obviously, it's had a series. If we look at the 30-minute chart, it's a series of bull flags. We see it rally, consolidate, rally, consolidate, rally, consolidate, rally, consolidate. Yesterday, gold popped all the way up to 1612, 1613, which is way up here. Huge pop in gold last night, but it's fizzled all the way back down, giving back most of that. And as we talked about this many times before, news-based moves are usually given back, but obviously there's a lot of fear going on. Missiles are now flying 2 directions overseas, and that is a bigger concern that obviously retaliation, things could get a little bit uglier. If we take a look over at silver, silver was up huge last night as well, breaking through this resistance, this blue resistance area. Let's go back on the chart and see where that is. This is a significant pivot high through this kind of blow off top, and going back in time, it is a very significant standout high over here, and we had another blow off top through there and a oversold condition low here. So this is a pretty significant pivot zone in the market, but again, overall gold, silver miners have had a very strong move. more or less based on news. I think some of it was real, but a lot of it was based on news pushing price higher versus just demand growing. I think we could see them potentially fizzle out and hold their ground, but I don't see them really continuing to go higher unless things continue to escalate. But these news-based moves are usually short-lived, and I think they could hold their ground, but I don't see them really taking off going a whole lot further at this point just yet. Looking over at energies, natural gas, zoom right into the chart here. Natural gas continues this downtrend. It's really dragging its feet. We talked about it way over here, looking for a bottom to start to form and potentially roll up over here, but it's continuing to go down. And overall, it's still forming a little bit of a bear flag. We've got this, we got a drop here. Hard to see that. We got a drop here, and we got this tiny little bear flag forming. This could very easily continue to grind lower. We've have a series of these in the past. Market comes down, consolidates for a little bit, has a drop, consolidates for a little bit, has another drop, consolidates, has another drop. Got into some volatility. Overall, this short-term little period, we're showing that we could still continue to go down and hit a much larger, stronger support level down around the $2, 205 area. If we get down to these levels, we are starting to look for a reversal pattern. So if we start to get some strength here, we might look to get long, but we are also looking for, ideally, I'd like to actually see it flush down and have a washout low. This price action that is happening right here, let me just focus on the daily. This type of price action here, I would ideally like to see this start to pick up speed to the downside. So we've got 1, 2, and then this is kind of a drawn out, everyone's giving up, throwing in the towel, just slowly getting out. It's a never-ending grind of people selling, exiting the natural gas position. Ideally, I'd like to see the end of this kind of hook down and then see a reversal. And once it picks up speed, this third time is usually a charm for a market putting in a significant bottom, and we're looking for it to match more or less this bottom right over here. And if we could see the price come down and start to pick up speed and hook to the downside, we could see a knee-jerk reaction bounce. And if we get some more traction, I think we could really see this pick up speed to the upside and get to that 3 and beyond level. Looking over at crude, big pop last night. It was up over about 5% at one point. You can see the huge rally in crude. Overall, it has been slammed back down. And if you look at the previous time we saw attack overseas, this is the level that we've got the price hitting again. We got an exhaustion pop here. Looks like another exhaustion news-based pop. Overall, looks as though it's topping. It's struggling at these levels. It's getting pushed up, reverse back down, and we may look for an inverse play to take advantage of falling crude or potential energy stocks going forward. Anyways, that's it for this morning. Let's take a quick look at the VIX. I haven't looked at it yet. The VIX, surprisingly, not really doing anything too significant. The VIX is up 3% almost. Overall is up a little bit more, but again, it's still holding its ground. And the VIX really, I think we're getting primed and ready for it to have a big launch. You can see the VIX here has been condensing. If you look at the price action, it's been condensing down in this kind of pattern, getting into this oversold territory. We've seen it condense before. Fear just kind of dissipates. Eventually, we see some type of explosion to the upside. I think we're getting close to that, and that's one of the reasons why we're in the gold miners, because they should act as a safe haven play. I think they're going to start to outperform the market, the stock market, and as the stock market starts to fall, the VIX will spike, and GDX and gold miners should start to lead the way going higher. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.